We are 5 past the hour. I'm going to get right into it. Christian, nice to see you. Thank you for making the time to join us. Matthew as well. Oh, there you are, Esther. I can see the top of your room. There you are. You are a real person. You are a real human being. I've seen you on so many registration spreadsheets. It's so good to see you. So good to see you.
Good to see you too.
All right, with that, morning, Amelia. Oh, nice background. Very nice background. Linda, good to see you. Right, folks, with that, we're going to get going. I'm going to have you out at 5 minutes to the hour. And that means we need to rock and roll. And with that being said, my name is Pavlo Fatidis. I have a history of having done 2 turnarounds. I've been involved in M&A. That's the buying and selling of businesses extensively. I had the dreaded task of doing a family business succession and sale. For those of you who've got kids in the business or who are planning to have kids in the business, there's a very particular approach you must use to get them on board. I was extensively involved in marking MBA papers on company valuations. The mathematics of valuation is really important for all of us to understand, because ultimately it's the final destination, hopefully, for all of our businesses. The idea that we're building a business to generate economy for ourselves today, but ultimately to ensure that we're able to sell the business many years down the line. The establishment of Aurik saw us start, build, and sell 12 companies, and I'm also an author of 2 books. Aurik is a business growth service that we offer right across the board in Southern Africa, in Europe, in the United Kingdom, and more recently in the United States. We are not consultants or advisors, coaches, or trainers. We are business growth partners, and we link our fees to the outcome that we promise on delivery with any client that we engage with. We've got a business growth platform that we use to do this, and our sweet spot, and this is so important, is to really work with companies that are doing around $1 to $2 million of annual revenue a year, up to $50 million of annual revenue. It's important for 2 reasons. I deliberately use dollars as the indicator of the size of a business, because there is no reason for any of us to not think in international terms. Whether you be in the US, yes, it's a big market, but there is the rest of the world. Whether you be in the UK, equally a big market, but there is the rest of the world. Whether you be in South Africa, a country that builds the most remarkable resilience in the mindset of any business owner, there is the rest of the world. And the reason that I am in the United States is largely driven through clients that we're working with that are seeking and gaining entry from South Africa into the US, from South Africa into the UK, from the UK into the United States, and vice versa. We only deliver 2 outcomes with every client that we work with. Either you're here to scale and grow your company, or you're here to grow it with the view to exit it over a period of time. With that being said, there were some top challenges that were posted on the registration forms. How do you grow faster but contain your costs and increase profitability? It came out of a facilities management business that's with us here today. We will definitely tackle that. That is really the key to unlocking scale in a business. How do you get the right people to do the right thing all the time, every time? Yep, in the world of transport and logistics, it's an equal challenge to any other business. If you ever catch yourself saying, you know what, Pavlo, to get something done properly, do it yourself. Know that you need to get some help, because it is the beginning and the end of any business. A business without people is not a business. It's simply a job with you coordinating a team. With inflation climbing, how do you scale and manage costs? It's a big issue. We need to get lean and mean. We need to keep our operating overheads very, very tight. Despite the fact that we're constantly chasing revenue, we need to make sure that when that revenue comes on board, it doesn't see a rise in our costs, because if revenue and costs stay married together in tandem, it means that you're growing complexity and you're not growing profitability. Makes that business hell to manage, makes it harder to even sell. How do you delegate and make it stick to create accountability and responsibility in the process? Yep, financial services question, good question out of financial services, where people are your assets. Any services industry where people are your assets, the ability to delegate is what allows you as the leader in the business to get to the next level. But how do you do so in a manner that creates accountability, that creates meaning, that creates value for the individuals that then take on the tasks that you formerly used to do yourself? How do you hand over responsibilities and relationships to the next generation in a construction-related business? Construction industry is fraught with difficulty. Why? Because mostly it's all about project revenues. And holding on to those projects, making sure that each project in its own right is profitable, whilst trying to grow more projects, means that you need to be able to hand over relationships. There is a way to codify the handing over of relationships, which if you get right, booms the business. If you get wrong, busts the business. How can we work with you to grow our customers, to grow our business? Okay, Frank, that was your question, my friend. We'll definitely have a conversation on that. Think of it logically. If you look at your biggest customers, if they were to grow at almost 30% per annum, year after year after year, what would that mean for your business? Your biggest customers pull and draw and consume your products and services. Their growth, obviously, then is your growth. Great question, Frank. Our time together, I'm going to talk very briefly about our origin, the problem and the solution around the issue of growth and scale and exit, a quick foresight session on what faces us all tomorrow. Now, tomorrow for you might be 2 years down the line, 10 years down the line, 15 years down the line. But there are only two destinations for every business. Either it's a successful sale and exit, or it's a close. 94.6% of businesses in the United States, the most vibrant, exciting economy in the world, honestly, 94.6% of businesses started here, close. They don't get sold. So in other economies, the stats are worse. And the reason for it is that we excel at building income generative businesses, but we don't excel in building asset transactable businesses. We're going to get into it, so don't worry about the fancy language. We will get into it. I'm going to share a story of someone just like us. I'm going to share briefly about how we work with you to get this all done. And then I'm going to end up with an invitation to get us out at 5 minutes to the hour. Did you know 88% out of 10,000 mid-tier companies that we surveyed said they want to grow? The question, of course, is what happens to the other 12%? Well, frankly, they're going to die. If you're not growing, you are dying. Think of the logic behind it. If inflation is running at 4-5%, your country GDP growth rate is running at 1-2%. Your industry growth rate is running at 1-2%. By definition, if you're not growing at more than 12% per annum compounded, it means you're not standing still, you're dying. You're dying. If you're growing at around 10-12%, it means you're standing still. If you're growing at 15% or more, it means you're getting ahead. A business is like a body. It needs constant oxygen. And you've got to chase the constant oxygen, especially in a race, because no business exists in its own right alone. It exists within an ecosystem of competitors, but also opportunities. Of these 10,000 businesses, the survey brought out a couple of growth challenges. Many of them relied on hope. When we spoke to them, we realized that about 14.7% only out of the 88% that want to grow. So only 14.7% talk about growth for about an hour a month in a boardroom. And talk never turns into walk, because talk without a plan lets the walk not yield a destination or outcome. Of those businesses, 95% of their employees had no idea what the growth plan was, what the growth strategy was. that the company had growth in mind. They didn't know what they needed to do to contribute to the growth. To contribute to the growth. When you speak to employees in a certain fashion or manner, and you listen carefully to what's being asked and what's being said, people work for more than just a paycheck. They work because they want to make a difference. They want to be part of a bigger picture. They want to be part of a team. Not all, but by far the majority. 68.4% had misaligned functions. So the functions in a business are the gears that turn the propeller of the business. The gear of marketing, the gear of sales, the gear of operations, the gear of administration, the gear of people, the gear of money. If all those gears don't work well in a coordinated way together, well, no strategy and no talk in a boardroom ever yields growth. So what did these individuals do? They sought help, but they didn't get it. Many of them went to advisors and consultants and training colleges and MBA programs and business coaches and the like, and all they got was advice on how to grow. 88.6% said, we want growth, not the advice on how to grow. We want growth as an outcome. Of those that were given growth strategies, just on 5% were able to implement the growth strategy. It's no wonder that as a business owner, we should be worried about these two blue stats. 94.6% in the most vibrant economy in the world, with some of the most brilliant minds I've certainly come across who work as hard as we work in South Africa, are as committed as we in South Africa have to be to our businesses. 94.6% of those businesses closed in the 11th hour after a 10, 20, 30, 40-year career of generating good income. They failed to monetize their legacy into a big fat pension, which is what a sale is for most business owners. In family succession, in professional services succession, 74.3% fail in transferring responsibilities from one generation to the next in order to sustain the business. We thought this was a problem worth solving. So in the early stages of Aurik, in order to understand how to get this right over a 9-year period, we started, built, and sold 12 companies. 2 failed. You always learn the most through pain rather than through joy and happiness. But we had some joy and happiness because 2 listed on the stock exchange. 3 were sold to teams in succession transfers, and 5 were sold to corporate buyers. And what was most interesting behind this is that the last handful of businesses took half the time, our most precious commodity, half the time to yield the same value as the first handful and a third of the cost. When we unpacked what we had done from business 1 to business 12, we started to notice that there was a very structured, organized, simple approach to how you create a strategy, a growth strategy for a business, and then how you communicate with your clients in marketing, sales, ops, administration, and how you get a team on board to drive what we then call those 4 elements which make up the system of delivery to resonate with your customers. We called it the Asset of Value Business Growth System. Our impact since then is we've worked with about 3,100 companies. On average, across the board, over the period that we've been working with them, they're achieving a 28.9% compound annual revenue growth rate. So call it 30%. You're growing this year at 30%, the following year you're growing at 30%. Over 2 years, effectively, you're growing at around 64-65% of your revenues. In your 3rd year, you're doing over double the revenues than when you began. 32.4% increase in EBITDA, the profitability, one of the key elements that raise a company's valuation, and across 3 continents. And thank you to our clients, thank you to our facilitators, thank you to our team. We've achieved a 97.4% rating on both the experience of working with Aurik, but the impact, the outcome that our clients have enjoyed. I want to start off by asking you a question. And where is my question? My question is, why do you do what you do? There should be a video playing here. It's not playing here, which is really disappointing, but the video will play on everything we send you. It says, why do you do what you do? We need to think about this a little bit. We do what we do in the early stages to create economy for ourselves, because there are two things that drive every business. The one is necessity. Out of necessity, you start a business. You might not want to or are able to get work in corporate life. You might not want to or able to get work in government life. The alternative is the entrepreneurial route. You start a business. And in starting that business, what matters most? What matters most is generating economy. If you can't get revenue and you can't get cash flow going, you're out of business faster than you started. But if you can, over a period of time, you become good at it. You become good at sustaining a business, at generating income. You become good at building a team to support you in the process of sustaining a business to generate income. Necessity is essential. The next thing that then comes into play is passion. Because if you can see in your business that what you do makes a difference to the lives of your customers and clients, it becomes a world of meaning, a world of impact, a world of value for you as a business owner. And through that world, it makes you want to do more of what you're doing. Generating income is an essential feature. So then why do 94.6% of businesses started fail to sell? Because there are two further elements that are needed to turn an income generating job or business into a saleable asset. And that is, along with generating income, you need to be able to deepen the capital value, the profitability of your business. And the third part, the hardest part, it all needs to happen independently of you. That's what defines an asset. An asset is something that can be tradable. If there's income growth, if there's capital growth, and you are not square and center to all of that, it means someone can acquire that business and enjoy what you've enjoyed in the future ahead after they pay you out for the business. Turning a job into a business should ultimately answer the question, why do you do what you do? From an Aurik point of view, we do only two things with our clients. The first is we make a promise of getting a business built to scale with a view to grow and with a view to dominate within its industry. We do so at a local level with a view to expand the business internationally. And the whole question of dominance becomes a big question mark. How does a small or a medium-sized business dominate within a big industry? If you look at it from that perspective, only the big businesses with big balance sheets and other people's money can ever yield that outcome. If you look at it from our perspective as mid-tier companies, when we talk about dominance, we say that within any sector, there are many different types of clients. If we pick our clients smartly, those clients are organized into groups of many customers. Dominance within that customer group is what we refer to from an Aurik perspective. It's also, which I will show you later, yields the highest valuations. The second outcome that we promise is one where we work with you to grow the business with a view to deepen profit in order to turn the business into a transactable, saleable asset, something that can be sold so you can exit and monetize your legacy behind that exit. It can happen either through a third-party buyer or can happen by you transferring the business onto your team and getting paid out over a period of time. There are many different ways to exit a business, but the business needs to be built into a saleable asset in order to achieve it. With that said, I want to talk to the 9 impediments to business growth, which again, my videos are not playing, and I had a problem getting onto this session myself. There are effectively 9 problems that we face as business owners, And they're divided into three categories. The first category is around leadership. How do we set a strategy for our business in a world that's forever changing? If it's not inflation, it's electrical supply. If it's not electrical supply, it's trade and supply chain interruptions. If it's not supply chain interruptions, it's stupid politics that creates a whole lot of uncertainty. If it's not that, it's the skills drain. And where do we find the right people and good talent? The problems seem endless. When you're building a business, like sailing a ship, when you're out at sea, you can't chop and change direction and decide that you're going to go to one port or another port or another port. You need to build a business in the stormy, choppy waters that has one destination only. How do you get that right? The big challenge in leadership. How do you spend more time leading in your business rather than doing? Essential to how you invest your time or spend it. How do you identify the right team members, get delegation right and accountability right? It is a leadership issue. In the functions of a business, the gears of a business, how do you win, find and secure and hold and retain more clients and customers? In operations, how do you service your customers without creating chaos in the business? And then finally, with your team, how do you empower your business through empowering your team in order to create a purposeful team that knows what to do, when to do, and how to do it, and do so every time? How do you create that accountability? And then three challenges that lie in the future. Are you building a job or an asset? How do you know? If you have spent 10, 15, 20, 30, 40 years building a business to generate income, that you're building a business that can be a transactable asset. How do you get that right? How do you ensure that you're going to monetize your legacy? There are very few businesses that still today run without constant reinvestment. The constant reinvestment is driven by the fact that you constantly have to be innovating to stay ahead of a very competitive environment. 9 big challenges that all of us face. From an Aurik perspective, we solve those challenges by working with you to build your business in what we call an asset of value. That is a business that has 5 layers to it. The first layer is positioning. It answers the question, what makes your business special in the eyes of your customer? If you believe that it's your product or service, I think you're going to find some tough times ahead. Think of it logically. If you say the features of my product or the way that I deliver my service sets me apart, understanding that you're competing with 2, 3, 5, 10, 15, 50,000 other mid-tier businesses in your industry. Out of necessity, they have to improve their product and they have to improve their service. So product or service advantages are short-lived. If you say it's my price, for the same reason, they've got to meet and match that price. Very often, we get told it's our personal service to clients. And yet when we do a deeper dive into the business, what we realize is that that very personalized service, what we call relationships with clients, sits mostly in the hands of you, the business owner. It means that you, the business owner, are the business. It means that should you of a day get ready to make your business available for sale, any buyer is going to see that right up front and recognize very quickly that this is not a saleable business. What we have learned over the last decade is that instead of looking at your product and your price and this idea of personal service, within your sector, decide which customer groups you want to serve, where your product or service solves problems for them, the pricing is acceptable to them. In that instance, learn from them how they buy, how the problem comes about for them, how they want to hear and learn of you, how they want to engage with you, and how they want to be serviced by you when you meet with them in order to solve their problems with your product or service. because that gives your business shape. It's the true definition of a customer-centric business. It's what creates an experience for customers in that segment that you have chosen to serve. It's what, if you become excellent at serving, doing, and delivering, will set you apart from your many, many other competitors who are trying to service all customers right across the industry, right across the sector. People buy on the back of their experience. They know there are many providers of products and services. They know that the prices all ultimately become the same. The experience economy is what wins the game every day, all the time. We call that positioning. Once you have gotten your positioning right, the next question you have to answer is, how do you achieve a consistent, reliable experience for your clients and customers? Well, if we understand how our clients and customers buy, how they learn about us, how they want to be serviced, it means that the marketing system, how we generate new leads, how we organize our marketing activities, we can build a system to marry and match their experience and their requirement. When they engage with us, we can build a sales system to marry and match the same. The operation system and fulfillment process will be the same. The administration system will be the same. In many ways, the way you market, the way you sell, the way you operate and fulfill, the way you administer, should be defined by the experience your clients want, not what works for you, or not what falls within your skill set, or not some piece of software out there promising to do it for you. Getting that right, we call it a system of delivery, and it feeds into anchoring your positioning. With that in place, all these activities organized into a sequence with measured outcomes, you can now get a purposeful team built. How do you get the right people to do the right thing all the time? If you understand why you are recruiting someone, and you have a system to guide the activities that they would perform within the system of delivery that resonates with how you've positioned your company to a client, it immediately makes the process of recruitment easier, the process of selection easier, the process of training, the process of delegation. If I can delegate activities in a sequence that give a measured outcome, I can train on them. Through that, I can marry and match myself to the right team member. Through that, in that team member performing, because they're performing, they feel good about their work. Because they feel good about the work, they want to perform better. In performing better, they will lead those sets of activities or that system. They see and understand their role, their function in the greater scheme of things. It's what creates meaning and value in work. Getting these three layers right delivers two outcomes for you. The first is organic growth. Organic growth is the growth rate that you're going to chug along at. Let's call it 12%, 15% per year compounded. You understand what your business is, defined by your clients, not your products and services. You've got a system of delivery that works well. You've got a team that runs and operates that system of delivery. It should not need you more than 10, 20% on a day-to-day, week-to-week, month-to-month basis. The second thing it gives you is time. And with that time, you, as the business owner, should be focusing on what we call accelerated growth. Where do you find the next level of growth? By bringing on new products or creating new services or finding new markets. What's essential over here is that new growth must not disturb the purring, smooth machine of your positioning, system of delivery, and team. Any new market that you bring on board or any new product that you bring on board must fit like a hand in a glove to the system of delivery and with your team. It's the key to scale. The key to scale is building this engine below that can fulfill promises to clients and choosing the right growth strategy that maintains that engine and doesn't disturb it. If you get it wrong and you bring new growth on board and it creates chaos in operations, what does it do to you as the business owner? It puts you back into the daily, weekly, monthly operating activities of the business. It means the business is about you. It's not about the design that we're busy shaping up over here. With that in play, the last thing you need to focus on near the end of your career is, how do I ensure that my role in the business is made redundant? And most importantly, how do I lock in the 5 levers of valuation? Now, I wish I could share the 5 levers of valuation with you, but it's a deep, deep trade secret. Unless someone asks nicely. I asked Pippa to help me with something a little bit earlier today, and she said, if you give me sweeties, I will. So I gave her sweeties, and she's helped me. Jokes aside, we're going to talk about the 5 levers of valuation. What do these 4 layers deliver to you? Time to lead, tick. Organic growth, I've explained how. Next level growth, which is where you bring new growth into revenue on a sustainable, moderated cost base. And ultimately, when you bake in the 5 levers of valuation, and don't take this personally, it makes you largely redundant in your own business. It's a space that you want to be in, because this is preparing the business for exit. So let's talk about the 5 levers of valuation. Around the world, more or less, it varies ever so slightly depending on the industry, the economy you're in, the time of the mood and the temperament of the economic environment. Businesses have a starting valuation of 2 times EBITDA. EBITDA is all your free cash flow profit. So think of your net profit before tax, right? Take out all the non-cash flow items like depreciation, amortization, interest from funders, etc., and so forth. It's the hard cash profit that you make month on month on month in the business. So 2 times your annual EBITDA is the starting point. It means, let's say you're generating $1 million of EBITDA. The starting point of valuation in your business is going to be $2 million. Around the world, in some cases 3, in some cases 1, depends on the industry, depends on the sector, depends on the country you're in as well. If we look at this graph over here, we have an EBITDA multiple. Here's the 2. On a $1 million EBITDA, it gives us a 2 million valuation. The first lever you can pull answers the first set of questions any potential future buyer would ask you. They're asking you, what makes your business special? What sets you apart from the 5,000 other businesses like yours that I could buy instead of yours? To the extent that you can show you have something that distinguishes your business, which from an asset of value perspective is not your product, is not your service, is not your price, but evidence that you've looked at your sector and said there are 3 groups of customers in amongst the many, many groups of customers that we as a business have chosen to dominate. And let me show you how we are dominating it. 4 years ago, in group 1, we had 2% of the market. In group 2, we had 5% of the market. And in group 3, we had 7% of the market. Today, as we stand here, we have improved penetration into those markets and ownership of those markets by 15% across the board. We own 15% of each of those 3 market segments within our broad sector. Tick, you have pulled the positioning lever that earns you an additional multiple from 2 to 3. 3 times $1 million puts the same company at a $3 million valuation. Right, I can see what sets you apart from your 10,000 competitors. The next question is, how does it all work? What is the playbook that you can give me when I buy your business I can use to do the same that you've done over the years before? We call that the system of delivery. To the extent that you can show a system of delivery, you get an additional multiple. The third question a buyer asks is, okay, I can see what sets you apart. I can see how you make it all work, but who does it? To the extent that you can show a purposeful team, where you have the right people doing the right thing at the right time, empowering, leading, and driving the system of delivery, to improve your positioning in the market. You get an additional multiple. Now, any buyer, when looking at a business, is not wanting to buy a business that's declining. And the reason it matters to you is because that buyer is asking in their minds, in the future, what growth rate will I enjoy if I buy your business today? The only thing they are interested in looking at is what the last 2 years of growth have been. An argument that says, hey, Pavlo, you know what? If you bought my business today, there's so much potential I never realized. A, I never had the money. B, I ran out of gas. And C, the market conditions were very different. It's all BS. A buyer does not pay for potential. They pay for what you have managed to achieve. If you can show growth in the last 2 years before you sell, it's that growth that the buyer will look to the future to enjoy off the back of your business. And for that reason, they pay an additional multiple. The last question, and most important, is they then look hard at the business to see what makes it special, see how it works, see the team they're going to be embarking with, enjoy the growth you've enjoyed to date, and then they ask, without you there, what will happen? And they will do a deep dive to understand what relationships you have with your suppliers, what relationships you have with your customers. And if they believe that those relationships are important to the business itself, you will be punished on valuation. If you can clearly demonstrate that you are independent of those relationships, you get an additional multiple. Folks, the same business that gets valued in the market at $2 million, the same business, if built right, can be sold for $7 million. It's ours to win and ours to lose. And it's all a function of how you design and build your business. Getting these arguments wrong will see that valuation climb right down to a point where it's simply easier and cheaper to simply close the company. It's the difference between building an asset and building a job. How do we work with you to make this happen? Well, building a business is like sailing a ship. If you think about it, you leave a port to sail to a destination. If you know that that destination, let's say from Cape Town Harbor to New York, is going to take 16 days, you make sure you have enough food, fuel, and water to last you 25 days because there are storms out at sea and things go wrong. No different to a business. Your resources need to get you to the destination. The next thing is you need a crew. And the crew needs to know what to do, when to do, and how to do it, especially in stormy seas, because of what keeps the vessel going and what keeps it safe. We call those systems. We call it a purposeful team. The next thing is, as a captain, you have a choice to be in one of two places. You can either be in the engine room, which is below decks, and the engine room is important because that's what keeps the engines going to create propulsion with the propeller that gives you that forward momentum. We call that income growth, essential. Alternatively, you can find yourself up on the bridge of the ship. And the bridge of the ship gives you a 360-degree view. You have a dashboard with a whole lot of instruments. You're in control of navigation, which means you're in control of direction. And your job there is to lead the ship from where you are to ensure that you get to the destination safely and in the shortest period of time. All of us as business owners should have a ratio of 70-80% on the bridge of the ship and 20-30% in the engine room of the ship. Building a business is like sailing a ship. So how do we sail with you? Should we engage? The first thing we do is we run a whole lot of diagnostics in the business. We understand what your strategy is. We look to see what the levers of change in the economy are, what's happening with politics, what's happening with currency, what's happening with legislation, what's happening with technology. How will that change the shape of the industry you're in? We look at the numbers and turn your numbers into ratios and benchmark those ratios in the industry. In your industry, you should have a gross profit of this, or gross margin of this, a net profit of this. Your operating expenses should be more or less here. That's the stock standard benchmarking. How do we improve that? We look at yourselves as leaders in the business. Someone said something so smart the other day to me about psychology. And he said to me, the hardest thing in life to be a leader is to see what we can't see about ourselves, our attitudes, our own personal psychology, our own behavior. And he says, it's very hard to see your shadow when you're standing in it. So true. An opportunity to get a broader sense of what your strengths and opportunities are on a personal level has a big impact on how you lead, manage, and organize a team, and therefore how you lead, manage, and organize a business. And then the fourth diagnostic is we look at the 207 activities that make up the system of delivery. With that in play, we now know what's there and what the gap is. On the back of that, we then set goals. Strategy goals, number goals, business system goals, and of course, personal goals. Where do you want to be in your business? A year from now, 2 years from now, 5 years from now, 10 years from now. It is essential that we all have a personal vision for ourselves, of ourselves. Because without that, you will simply do what you've always done. And when you simply do what you've always done, you'll only ever have what you've always had. Aspiring to greater heights should surely be a key driver, not only in our businesses, but in ourselves. With the goals well defined, we then start doing the system build out. And the system build out is fundamentally practical. You get up to 12 system experts working with you over a 24-month period of time. They don't only work with you, but they work with your team. Because here's the thing, when you build a system, and in building the system, you engage your team so that we can hear from them what they believe would be best in how you market your business, in how you close deals, in how you service and fulfill your promises, in how you administer your clients. Bringing your team on board to co-create the business with you shows respect, it shows you value them. And when people feel respected and valued, it creates meaning and it creates commitment and it creates accountability. When those systems are built, which are all practical activities, put into a sequence with measured outcomes, that accountability is the key that unlocks delegation. It's through that that you create a purposeful team. We then focus extensively on growth all the while through. Those goals are loaded onto a dashboard. That dashboard, which has made your dashboard, gives you a visual representation of the cogs that make up the system of delivery. It allows you to delegate work to your team. The data that comes out of there is like the navigation data that you use to see where the storms are, where the big waves are, so you can sail more safely to your final destination. And then from there, we focus extensively on ensuring we're baking in the 5 levers of valuation, including lever number 5, how to make yourself more redundant. The body of evidence that we build in that dashboard then gets used for you to manage your business past our relationship, to bring the body of evidence to bear should you be looking to raise funding, and to bring the body of evidence to bear should you be looking to sell and exit. The reason to work with us, there are many, but I'll share 8 with you. The first is we align very quickly with you. We're not advisors, we're not consultants, we're not coaches, we're not trainers. We carry risk, and we attach our fees to the promised outcome that we agree with you we want to achieve in your business. If you don't grow, we don't grow. We go to bed and wake up thinking about your growth because we're carrying risk alongside with you. Value. We bring up to 13 expert accredited facilitators to identify the gaps, to build out the goals, to work with you and your team across the systems we put in place, to pay attention to growth and to ensure the value. It's not just one or two people who show up. It's the best horses for the best courses. Impact is huge, and the reason for it is we don't work only exclusively with you as the business owner. We work with your team. Your entire team gets the benefit of our relationship. Your entire team has an opportunity to rise with the tide and get themselves to the next level of opportunity within your organization as your business itself grows to the next level, rising with the tide in tandem. It leads to quick and immediate delegation, and that leads to very quick impact. Something we care about because we attach our fee to your growth rate. It's complete. It's a single system that builds an asset of value. The 5 levers of valuation are baked in. I often say to many clients that we work with, one of the keys to scale is simplicity. If you can institute a simple system of growth in a business, and you can entrench that single system of growth, for so long as it's been built right, it will yield the outcomes that you want and expect. It's tangible. Everything's on a dashboard. It's your dashboard. We turn the data into a story of the business. The story of the business shows you graphically where the opportunities lie, where the areas of weakness lie that we need to bolster and strengthen. We collect the data and we forecast the future. We can help you understand the capacity of your business. We help you understand the optimum time to get value in the business from a funder, the optimum way to maximize your valuation. It's almost like looking into the future from that perspective. What does it cost? We come in at around 30 to 40% the cost of a director in the business. A director who focuses on one narrow lane in the business, or 60% of one of your sales members, or 60% of a lead generation agency. They all focus in one very narrow element of the business. We bring in not only up to 12 facilitators, but we focus right across the business. And we focus not only on growth, but we focus specifically on deepening profit and EBITDA. There's an ecosystem that we have in and around us. We took a decision that we would only focus on growth and growth as an outcome. And for that reason, we have got relationships with people who are tax experts to support structuring the business for an exit, to support the process of succession. They operate globally in 42 countries. We work with business brokers on the sell side and buy side. So when any of our clients are looking either to sell their businesses or buy underlying businesses to accelerate their growth, we find people who are experts in doing that and only that and are aligned to us. Knowing what you're good at and playing to your strength is essential for all of us. And then finally, the 8th reason, we will only work with you if we believe that in doing what we do, we are able to deliver an outcome that would see the company grow. For the simple fact that if it does not grow, we burn, we carry risk. We've been given a 97.4% rating across our clients for delivering on these 8 values over here. And it's with that in mind, will my video play, that I'd love to share a story, and my video did not play. Very frustrating, I apologize for that. So what would the next steps be? Well, the next steps between us is, let's meet and see if we can impact your business. What does a meeting cost? It costs time. I can assure you that our team are growth experts. Yes, they're involved in business development, but ultimately they are experts in business growth. The conversation with them will be elucidating. Should we do nothing thereafter, you'll walk out with value, just in terms of how they would engage with you around your business and the conversations that would emerge as a result of that meeting. If we can impact your business, we'll provide you with a fully costed proposal. We'll talk about what we intend to do, how we intend to do it, and why we think it would be of value for you. Should that proposal be acceptable, we then have a meeting with our InvestCom, an opportunity for you to experience how we would work with you on a monthly basis over 24 months. to experience how we think, to get a broad sense of how facilitators act, behave, and look at the business and look at engaging with you and your team. For us, it's an opportunity to confirm, is there a good fit between us? And in doing what we do, will we have the growth outcome so we can manage our risk? On the back of that, if we both agree to work with each other, you on board what we believe in us is a very dynamic business growth partner. Should we not be able to impact your business, we've locked a relationship for the future. In everyone's future, things change, unexpected events occur. You might wish to sell your business and realize that the price you're asking is not the price the market's prepared to pay. We will then be the right opportunity for you to get your price to that level. You might wish to grow, but you hit a ceiling. We make a perfect partner in order to smash through that ceiling. You might wish to enter new markets, but you don't have access. With offices in the United States, the United Kingdom, Europe, and South Africa, we've got broad access, broad networks, broad relationships. Let's meet, let's greet, let's have the conversation. It is 4 minutes to the hour. My promise to you was to have you out at 5 minutes to the hour. We will be sending an email to you with a recording of this event and an invitation for us to meet and greet. From my side, thank you for not spending time with me, but for investing time with me. I truly hope that you walk out with good value here.